Thanks for tuning into this edition of IPO Adda. I'm your host, Niraj Shah. Angel Broking is a company that all of us have known all through the last 15 years that you would have seen me on TV or on the digital medium. You would have seen me interacting with the guests from Angel Broking. Well, they got incorporated, I think, in August 1996, and now they're going public. And to talk about the IPO, how the business prospects are, joining me on the show are Dinesh Thakkar, who's of course associated with Angel since the time we know, and Vinay Agrawal, who's the CEO of Angel Broking as well. Gentlemen, both of you, thanks so much for joining in. And at the outset, I hope all is safe with both of you.
Absolutely. Thanks for inviting us.
Okay, tell us a bit about Angel now, because most people would associate Angel as a broking company, and either of you can start. What is the current form of Angel Broking as it stands in terms of business, and why should investors look at the company?
See, Angel started as a company who cared for users. When I started my journey, I started as an investor, and I saw this industry was very kind of like running on a manual and outdated system. That is where aspiration of like using technology and becoming a tech-savvy broking house started. But we never forgot that whenever we're using any technology or any kind of like innovation, we have to see that users' interest has to be taken care. And when it came to like millennials and young people started using mobile app to trade on a stock exchange or invest on a stock exchange, we were very fast to be and agile to make and digital kind of like journey for this digital millennium, including our mobile app, very, very intuitive and very, very friendly. So today, if you see that most of our customers are mobile first generation, they are coming from tier 3, and we see a big growth in that segment. So tier 3 is an area which did not have an access to stock market. And I see lots of youth who are very comfortable using mobile app. And when they get their first salary, they are very comfortable even investing in equity. So that is where we see a big growth in this segment.
Yeah, let's talk a bit about how the company is evolved as well, right? And how you have kind of changed the tracks quite admirably, I must add, in the last couple of years, because I see that in your incremental share of demat accounts, in the market share that you have, etc. And Vinay, you may want to dwell in on this as well. Has the Angel in the last couple of years, Angel Broking as a firm, changed in terms of the offerings that you give and the way in which you are getting new clients or onboarding new clients?
Yeah, sure. I mean, so as Deshbhai kind of talked about it, so we have completely changed our model, from opening branches to really serving our customers digitally, because we realized that bulk of our customers are actually coming from, more tier 3, tier 2 cities. Most of them are young, our average age of the customer is like 30, 31 years, so we found that they are digital natives and they prefer to do everything on the app. So, systematically over a period of time, what we did is, we kind of moved away from our whole branch model. So we don't have any branches now. I mean, we have moved completely to digital model. And what we did is like we digitalized all our services, so that the customer can experience everything digitally. The second important thing that we did was, we started creating and investing money into, lot of artificial intelligence, lot of machine learning tools, so we created this whole tool called ARQ, which is like a robo-based advisory, which helps customers to do their risk profiling and then choose a specific stock or a specific mutual fund and build their portfolio. So we're the first one to kind of launch, this whole machine learning based investment advisory engine. And then, for going on from there, we kind of keep investing into everything in terms of technology and digitalization so that the customer experience improves significantly. So let me talk about digital engagement journeys that we created, where we started profiling our customer again using machine learning based on his trading behavior, based on his other data points that we collect, and then we started serving them, things which he will love, we started engaging them more. And then this kind of helped the customers to get more engaged with us, and it improved the customer experience so significantly. I mean, you talked about it. Our market share just kept on rising. I mean, our market share in FY18 in new customer acquisition was around 4%. Now it has grown to 15%. I mean, so what started happening was customers started liking us, they started promoting us, they started referring us more, we started getting more and more customers. And now if you see, bulk of our customers are coming from tier 3 and tier 2 cities, which also shows that we are getting more referrals, we are getting more young customers. So all of this
Sure.
really helps us to build this, digital organization.
Yeah, so the question is, and I want to focus on the broking part a bit before we talk about some of the others as well. We've seen the advent of these discount brokers come in a big way, right? If I'm not wrong, I saw a headline 2 or 3 days back about you guys also foraying into a similar line of work. So what happens to the traditional bread and butter business? I'm not saying brick and mortar on purpose. I'm talking about the bread and butter business. How much does discount broking therefore come into play? And what does this do to the overall revenue pie that the organization gets from the brokerage business?
See, let me answer this first part of your question. We have to look at user. What users are preferring today? Are they preferring to come to office and do their first trade? No, because users are young, millennials. They're busy with their jobs, and they prefer doing whatever they are doing, like shopping, travel planning, including even stock investment through a mobile app. So there is no way like we can change a habit of a user saying that, okay, don't come through mobile app, come to our branch. So we reacted to what we saw in the market. And we know that, okay, we had started this company as a tech savvy. So to move from physical to digital was quite simple and easy for us. But what was important that whatever user wanted traditionally also, we digitized that. As Vinay said, that we actually digitize this whole process of advisory and research and build a very robo-based kind of advisory system, which we called ARQ ARC, which has delighted customers so that he can invest, trade, track his portfolio 24/7, 365 days. So he need not have to go to a relationship manager and check what he has to buy, what he has to sell, or track his ledger portfolio. It is so convenient for millennial. There is no other way but to serve them on mobile app. So that is what I am saying. We reacted to what user wanted. And that is a market which is growing very fast. If you look at our customer acquisition growth rate compared to in this Q1 of FY21, we acquired almost 350,000 customers in that quarter with a monthly average of 115,000 customers compared to 46,000 we were acquiring last year. So growth of 150%. So you can see these millennials are really comfortable using mobile app, and there is no way we can change their habit. We'll just get into their mode and deliver them what they want.
No, agreed. So therefore, my question, Mr. Thakkar, what happens to the business metrics? Because I can clearly see that your customer acquisition rate, not just for the quarter gone by, where almost every other brokerage also has gotten it, but through FY18 to FY20, the net ads have come in at a very good rate. But what does it do to business metrics, to revenues, to profitability? Because those numbers also in a way matter. Or are you changing the track in a way that you're not looking at top line and operational metrics for a while and looking at customer acquisition?
No. We are an organization who are very bottom line focused. And if you look at our Q1 number, you can see only we have seen expansion of our margin after moving from traditional model to a flat broking plan. So you can't discuss much, but you can look at Q1 number and you can yourself see that customers that we are acquiring are just expanding our margins.
Yeah. So, okay, I know you guys would be under regulations for not giving out numbers, but my question is, so when I look at FY18 to FY20, and either you or Vinay, whoever can come in, by the way, I'm just asking open-ended questions, but if I look at FY18 to FY20, revenues came off a little bit for that period compared to FY18, and the bottom line as well as the EBITDA margins too came off. Are you saying that has now stopped, and what's happening in Q1 FY21 is the new normal?
So you have to look at our model in a way that FY19 was a year where we were building these digital properties. And at the same time, top line got impacted because of ALM issues with lots of housing finance and NBFC, where small and mid cap did not perform. But our performance was far better than industry. So that covers top line. Bottom line was because we were investing heavily on digital properties, trying to make the shift what we made. And FY20 was where we introduced iTrade plan, which was flat broking plan. So definitely we had to take a hit on our top line. But because of very excellent kind of customer acquisition growth, we were able to maintain our top line. So if you see in digital model, operating levers will kick in only when you reach a scale. So that is what we feel. In Q1, we were able to reach that scale, and we were able to show that kind of margin expansion.
Vinay, you reckon this is a new normal and you would be able to continue with this pace? I mean, it seems a bit absurd, right? Q1 was an aberration simply because everybody stayed at home and therefore resorted to doing this. This will normalize, right? So what are the near normal numbers? I'm not asking for exact guidance, but in any flavor that you can give, because brokerage income still is 74% of your total income.
Yeah, just to add to it, I mean, see, we already reduced our price. Now that's 18 months old story. We are kind of moved to a flattish brokerage rate. And even after that, when you're seeing our revenue is kind of stable and it's growing. So I mean, you can understand that we have kind of crossed that cycle. So it's absolutely new normal. Because you have done whatever price drop you wanted to do, and then it has been stable now for what 18 months or so. And still when you see a growth in your top line and your profitability is increasing, I mean, you can understand we have really got into a fully digital model. See what happens, in the digital model is, once you kind of get into a right kind of scale and size, with the incremental clients that you add, your cost does not go up. So you start seeing the advantage of operating leverage. So your top line starts kind of falling into the bottom line. So that's what has essentially happened. So you can absolutely take this. This is a new normal, and it's a fairly stable business, and it has become a new digital business, where incremental revenue does not mean incremental cost.
Okay, but
just to add one more flavor to this. See, you have to see that COVID and this work from home was for everyone, and we have gained market share in a big way. So that shows it is more. It is actually beyond work from home. It is more of digitization. It is more of tier 3 story.
Sure. Okay, just wondering, what kind of investments would you need to do into the tech platform to be able to, maintain or better this? The reason I ask this to you is, when we speak to Zerodha, for example, about what's the number of employees per 100 that they have dedicated to the tech team, they say that's about 3 or 4. And we speak to Upstocks or RKSV Securities, they say about 50-55% or 50-55 of the employees per 100. What's your game plan out there, and how much more tech investment would you reckon, or maintenance would you reckon you'll need to do to maintain this platform? I also, if I'm not wrong, please add to this. You've also launched a zero brokerage platform, right? Or a discount broking platform. Yeah. So just two questions rolled into one.
Yeah. So I will again clarify. 18 months back, we launched this discount-based plans, flat broking plans, correct?
Okay.
So it's not now, 18 months back. So it's stable. Bulk of our customers are into this new plan, which is like the flat broking plan per order, which is 0 for delivery and 20 rupees for everything else. So we have already launched it. So if you see in FY18 itself, now we grew our cost. FY9, I mean, in FY19 you saw an increase in the cost, and then FY20 kind of stabilized. That cost that we grew was only technology. So as I said, we have moved away from the whole branch-based broking model. So we kind of cut down all our physical B2C branches. So you see, we have already taken enough cost on the technology on the digital side, and it's going to be continued. Now our products are all launched, they're all up to date, they're one of the best products available in the market, but we're still not giving a guidance that will reduce our technology or the digitalization cost. So what I wanted to share is we've already built a very, very decent size technology and digitalization cost. We have built the right products, which is already live and customers are using it, but we don't believe that we are going to reduce this cost, but we are going to maintain it at a similar levels, so that we are continuously able to improvise and kind of do new innovation and come out with better features and keep upgrading our platform. So we are not expecting a big increase in our technology cost from here.
What about the sales and marketing cost? The reason I ask this is that all of you, I mean, all of the brokerages, the platforms are very tech savvy, right? I mean, nobody's platform is bad. Somebody might give extra features, but all platforms seem to be good. And now we have Paytm also venturing into direct broking, right? Which is a model similar to what you might be doing, or Zerodha, or Upstocks, or 5paisa might be doing. So what gives you the confidence that the customer acquisition spree that was witnessed in Q1 would continue?
So, as we shared, bulk of our customers are coming from tier 3 cities. The reason
they are the same for others as well, right, Vinay? Tier 2, tier 3, right?
This is true for mostly digital organization. So the top 3, 4, 5 that you are saying, it's true for all of them, but not true for others. It's not true for others. So if their acquisition rate is more or less similar what it used to be, earlier, let's say 6 months back or 1 year back. So all these digital organizations are growing not only because of COVID. I mean, you have to forget COVID is just one incident. They are growing because they have made a complete digital platform. See, you look at the retail penetration level. In a tier 1 city, it is 6%. If you look at a tier 3 city, it is 0.5%. You're getting me? And now this tier 3
Sure.
city guy is a young millennial. He is not afraid of investing his first salary into equities market. He's very comfortable doing it digitally. He's fully informed thanks to all these 4G and smartphones. So he's fully informed. He watches channels like BloombergQuint. He read reports. So he's fully aware of what's happening in the market, and he's happy to kind of get into this space, right? So digital organizations like us who have made this whole process digitally, where they are enabled to open their account as as quick as 10 minutes, straight 10 minutes, like a platform like us, straight 10 minutes you're able to invest, open an account and start investing with us. So these are the people who are getting activated. Their penetration level is very, very low, less than 0.5%, right? They're comfortable doing everything digitally. We have reached them digitally. They're engaged with us. They're happy with us. They're referring us more to their friends and family members. So we believe this is a trend which is kind of going to continue. We're not expecting a dip here.
Okay.
See, just to add over here, see,
Please.
CRISIL report says that this size of this industry is around 22,000 crores. So there is a space for few good digital players. And if you see in latest acquisition number, almost 65-70% acquisition is done by a digital player. So there is a space for 4 or 5 players. We are not saying there will be only 1 or 2 players, but there is enough room for all these 5-6 players to grow.
Got it. Okay. So last couple of questions. One is again on broking and then on the others, or rather one is on the other business streams and then the overall revenue CAGR, right? Aside of broking, your margin funding and other businesses, how do you think they shape up? They currently contribute about 24%. What's the quantum of growth there? And will that pie change?
So let me give a breakup. See, 24% is not margin funding. Margin funding.
No, margin funding and other businesses, right? I mean, your insurance distribution, etc., etc. All of them put together, I believe, is 24%.
Correct. So you see, sizable income is also from depository services, which is like part of the broking. Margin funding, or the margins that you keep with the exchanges in form of FDs, there is an interest income that is also part of the exchange. So you see, bulk, the 24% in some form is also linked to broking in a big way. So you can assume that the way broking business will grow, the other business will also kind of keep growing. So now coming to third party. So third party is something which we want to build. So right now it's a very, very small, minuscule part of our business, but we believe we have built this wonderful app called Angel B app, which is designed for third party and helping customer do their financial goal planning very well. So over a period of time, we believe that so that currently this 24%, if you're talking about it, it kind of completely is aligned to broking. So the way broking will grow, you will keep seeing this 24% also growing. But this is a new vertical which we believe will get built over a period of next few years, where we believe that there's a big opportunity for us to cross-sell our customers mutual fund, insurance, health products, and the whole digital platform is already made. Various experiments has already been done. We are seeing a good positive response from our customers. So we believe over a period of next few quarters, this business, third-party distribution business will get built.
Okay. CAGR numbers, FY17 to 20 revenue is about 15%. Q1 is a big jump from the traditional. Would 15% be the rough expectation CAGR for the next 2-3 years, if it's possible to predict that?
I don't think so. We can. Yeah.
See, first of all, it is not it is very difficult to predict anything. But what we are referring to figure FY17, 18, 19 was a physical and Angel transforming into digital. So I would say this is something like new normal for us. So we would like to take some kind of a clue from lead indicators like customer base growing and all that, which I said that it has been growing at quite a decent rate.
Got it. Mr. Thakkar, one final question. You've led this transformation. You've seen the broking business or journey, right? Since you incorporated this, we've seen a very fast new normal arrive of sorts in the last 5 years with the digital broking, discount broking come in. How do you see the industry over the next 5 from where it is right now?
I see lots of consolidation will happen, and this industry will move towards like top 10 or 15 players who will create their own niche. And most important is that player has to be technology savvy, First of all, domain knowledge is needed. Whatever one says, we have seen internet era, E-Trade came over here, and lots of combination did not work in our country. In our country, what is important? Knowing technology is commodity, but knowing user, having a domain knowledge is most important. So what I feel, people who have a domain knowledge will achieve a leadership position very fast.
Okay, well, we wish you all the best, both of you and your team, for this IPO. And we'll, of course, maybe talk to you post your listing as well. All the best for that.
Thank you very much. I appreciate it.
Thank you so much.
And viewers, thanks for tuning into this leg of IPO Adda.